So guys, welcome to VRD Nation. Through this channel, we are trying to educate our fellow investors and traders on practically every aspect of stock market, trading and investing. And we are doing this using real life examples, real life case studies and real life trades, right? So if you are new to this channel or if you are hearing me for the first time, do not forget to subscribe. So having said that, let's talk about the topic at hand, which is circular trading. So imagine that it is Diwali and you give a box of sweets as a gift to your friend Mr. Sharma. Now the next day, Mr. Sharma takes that box, wraps it in a different wrapping paper and gifts it to Mr. Gupta, right? And Mr. Gupta, in all his worldly wisdom, wraps the same box, puts a different wrapping paper and gifts it back to you, right? So in other words, your sweets made a full circle and came back to you in a different wrapping paper. Now on the face of it, this tradition of regifting may seem like a waste of time and money, but if you think about it, festivals are not about gifts, right? They are more about social interaction. So this one box of sweet, what it did was it facilitated that social interaction, right? It brought all these families together. They had fun. And at the end of the day, you got your sweets back. So it's all a win-win situation. Now I'm going to talk about a similar regifting practice in the world of stock market called circular trading. Although the motivation behind that is not that of brotherhood or social interaction, but that of manipulation. So let me explain circular trading with an example. So suppose there are three market operators X, Y and Z who want to inflate the price of a company called ABC Limited. So broker X sells the shares of ABC Limited to broker Y. Now broker Y in turn sells the shares to broker Z, and broker Z in turn sells the same shares back to broker X before the closing of the trading session. And all these transactions are usually carried at the same price and for the same number of shares. So just like the box of sweets that came back to you, the shares that the operator X sold came back to him at the end of the day. Now, if you're watching this from outside, you would say that, you know what, it doesn't look like a manipulation, right? Because there was nobody else involved and the prices at which the transaction happened, they were all the same. So no harm, no foul, right? Well, not exactly. Remember the circular trading of the box of sweets, they cause a lot of social activity, right? In the same way, circular trading of stock also creates heavy trading volumes, and that gets the attention of market participants, creating an unreasonable level of excitement and hype around the stock. Right? So what happens is that a lot of investors, they see this increasing trading activity as a sign of some important announcement, right? So they start thinking that, you know what, maybe something is happening in this stock, something big is going to happen. That's the reason why people are trading so much in this stock. So they start buying these stocks in the anticipation of a higher price. Now, circular trading is not just done for inflating the price like this. It is also done to show that the stock has enough liquidity, right? So it acts as a proof of interest among investors in the market. And remember, for traders, liquidity is extremely important. So traders whose strategies are based on the volume of a stock, they are the ones who fall prey to circular trading, only to realize later that that activity was only temporary. And when the stock starts to fall because it's not able to justify the valuation, these are the guys who eventually get trapped. Now, circular trading has been very common. It has been done in different flavors, and SEBI, our stock market regulator, has tried to prevent it from happening by creating different laws and also imposing some restrictions and punishment on them. So back in 2010, SEBI banned 16 people. What SEBI found was that through circular trading, these guys were manipulating the stock of the companies listed here. But the reality is that circular trading now is getting harder and harder to spot, especially given that there are a lot of algos which mask the intention of the buyers and sellers behind the scenes. So it is not possible to completely stop circular trading from happening, but as a retail investors, what we can do is we can do some due diligence before investing and trading in a stock. And the best way to do that is avoid trading in penny stocks, right? The stocks that are trading for very cheap, these are the ones that are the easy targets for circular trading. And if you avoid trading in those stocks, you most likely will stay away from the consequences of circular trading.